and welcome to another episode of In Real Life. In today's episode, we are going to be talking about 3 money mistakes that women make, and I would like to welcome my guest, Allyson Dennen, to the show.
Hey Edrina, it's so good to be here. I'm really excited about our conversation today.
Yes, I am too. So, would you mind introducing yourself so everyone knows who you are and kind of like what you do, a little bit about your background as well?
Sure, I'd love to. So as Edrina said, my name is Allyson Dennen, and I have been an accredited financial counselor for a little over 10 years now. And I work during the day kind of with military service members. I work at an Air Force base, and I'm a personal financial counselor there. And then independently, I like to focus a little bit more on who I work with, and I love to help women who are single and have maybe come out of a divorce or are experiencing other life difficulties. Because the facts are, when you see financial counselors, often they're led into finance because they have been great with money their whole lives, and you feel it's hard to work with them if you've gone through something where it has trashed your finances and you just need to come out of it. And so I like people to understand that you can have a realistic financial situation and come see someone like me. And so I like helping them learn how to rebuild it or to move forward from exactly where they're at, whether they're doing good or not so good.
Excellent. I love it. I feel like there are more times than not where you run across a situation where the wife had relied on the husband, and then they separated, they get a divorce, and the wife no longer knows how to manage their own finances. And so I have a lot of kind of experience with that, even in my short amount of years in the business. So I want to come back to like, maybe what is it that drives you, and like what is your why? Like, why do you keep coming back to this topic specifically? And so maybe we can understand a little bit about your background.
Sure. Well, my personal background, I did leave a difficult marriage. There was actually some abuse in it. And in my circumstance, I didn't have a lot of the financial abuse as some other women have. But in being in these circles and in my healing and finding communities of other women who've gone through difficult marriages and left difficult marriages, a lot of times what comes out in those situations is financial control, where the woman has not even been allowed to have control of the money. So that makes it just even more difficult for a woman then to take over entirely when she is now single. So that's kind of what started my why, as I was seeing women like this struggle and just not even know where to go or what to do with what they were left with after divorce. So that's my biggest why, but what drove me was the fact that it can be very simple. It doesn't have to be super complex. And so I want to give women simple strategies to know what is a wise decision. Often we don't, and we're just kind of floundering because you don't want to ask people about your money because you don't want people to know your situation, and it is very personal. And so giving them just strategies and things that they can go back to anytime they're making a financial decision, so that they're moving forward, they're seeing their money grow instead of dwindle, and that they're setting themselves up for a long-term financial freedom.
I love that. This is kind of, it's a hard topic. And I know that there are people out there who are struggling even as we speak. And one of the kind of messages that I want to make sure that we're highlighting in this episode is that you can do this. Personal finance is personal, and it is going to be hard to kind of relearn how to do your finances. But Allyson is here, and she has 3 ways that kind of we can address as we're going through these situations. So let's talk about the first money mistake that women make.
So the first mistake I see many women make, and this is whether you're married or not, is thinking that they need to rely on a man, or that should be their financial plan. So single women will often say, oh, well, just when I get married, they'll help me with the money, or then I can figure out what to do with investing or long-term retirement, because then I'll have a man to help me with that. That should not be the situation. And especially if you're married, you want to have your own both voice in the marriage and the financial decisions, but also you need to, I think, have your own accounts in the marriage. Um, Even if you're a stay-at-home mom and if you are not bringing in any money, I am a big advocate of women having some of their own money. And usually I would say that would start with opening an investment retirement account. And if you're not employed, it wouldn't be a 401k, but you can open up a Roth IRA or a traditional IRA at any banking institution, and money should be going into your retirement account at the same rate as the husband's, if that's possible. I think because not only in the case of a divorce, because you don't want to always think that way, but what if something was to happen to your spouse and you needed to access money right away? If your name wasn't on it, then there's a lot more red tape to go through if the spouse is unable to get into that account, even if your name is on it sometimes. So having your own money could be advantageous for any situation. It also is a good incentive to help you to learn about it and understand where it's going because it has your name on it. So I would encourage every woman to have their own accounts and to make it a priority to understand the family finances, be part of the goal setting, understanding where the money is going and what's being done with it, and adjusting those goals regularly with your spouse or on your own if you're on your own.
I love that. Time and time again, we grow up with this idea that our Prince Charming is going to be here to rescue us. And it's good to kind of step away from that and say, like, no, I am an independent person and I should have my name on accounts as well. I mean, you don't know this, Allyson, but I had a client who did not have her name on accounts and they got divorced. And so it was so much work getting that client's name on her bank accounts after the divorce. And it's like, I think, a couple years later and we're still having issues with it. So I definitely recommend, if you don't have your name attached to any accounts, do that right away. No matter if you're married, even single, and definitely have your name on accounts. I cannot stress that enough. All right, so let's transition into the second money mistake that women make.
It's having a big tax return each year. I don't only see this with women, of course, this is with Americans in general, because the thought with a tax return is the bigger the better. It's like They feel like they won the lottery, or the government's giving them something that they didn't earn, or it's free money, and that is just not the case. I think we really need to rework our mindset about tax returns. So really what a tax return is it's a refund of the money that you have paid extra. You shouldn't have paid it in the first place. And when you think of it that way, if you adjust so that you're paying the right amount of taxes in each paycheck and making your paycheck bigger and getting a small tax return, then you're actually managing your own money a little bit better. I mean, the government actually loves this situation. They love that we as a society want to get a big tax return, because that means that we have thousands of our dollars sitting in the government's account for a year or a year plus. So that's great, because then the government can do whatever they want with our money. They can put it in an account and earn interest on it, or they can pay down debts and save interest with it. And yet we're then the ones who are saying, oh, well, I'm just going to put Christmas on the credit card and I'll pay it with my tax return. So then Christmas costs us more than what we actually paid for it, because we're waiting for that tax return to pay for it. What if we just shifted that idea a little bit, and instead we had a bigger paycheck every year, and every month, put a little bit of money aside and we pay for Christmas with cash? That'll save us all that interest. Or if our car breaks down, then we actually have the cash in our account instead of waiting to pay it off with our tax return. That's a much better way to manage our own money. and to actually save money or make money on our own money. So
Yeah.
how do you do
Hmm.
that, right? Um, well, I help people on a regular basis and I help families, and sometimes I can adjust their taxes and their paycheck will actually go up $500 or $600 a month. Can you
Nice.
imagine that? I mean, that could be a game changer for a household,
Hmm.
especially for you single moms that I love to work with, because if you're a single parent, you actually get better tax breaks. So you should be paying in less money and your paycheck could go up, which would help you tremendously. So the best way to find out what you should be paying in each month is to actually go to the IRS website. They have a calculator where you can plug in your income and your tax information, and it'll tell you exactly how much you should owe by the end of the year. And they'll take what you've been sending off by using your pay stub and tell you if you are going to be accurate at the end of the year or how to adjust that so you are. Easiest way to find that calculator is just to Google, because they'd like to change the link every single year. So I would just Google IRS withholding estimator, is what it's called these days. Or you can always type in IRS withholding calculator, either will bring it up. And just make sure it's on the irs.gov website. But it can be a little bit daunting to work through that because some of it is kind of tax terms. So if you get into trouble, then definitely talk to someone like Edrina, or check on my website, get on my social media, and ask questions of us because we'd be happy to help with those kind of things.
Yeah, absolutely. And we'll leave the link to the most recent calculator estimator in the description box below. And I've definitely done like screen flows on how to do this on my Instagram account. So I'll also leave a link below for that. And, it's so funny that you mentioned, it's like one of those things where if we had the money sooner, rather than giving it to the IRS every paycheck, we would be able to invest those money. Any kind of like overage that we would have paid to the IRS, we can collect interest on that. And one of, a few years ago when I was actually in a regular W 2 job, I would actually try to calculate what my withholding would be, and I would get to zero as close as possible that I could do. Now, obviously, it's a different situation because I'm a business owner, and so I'm paying taxes rather than getting that number to zero. But it's a fun little kind of challenge to do for yourself, is to make sure that you're paying as minimal taxes as possible. And I love the idea that we can ask Allyson for questions that we might have on that. And so, what is the third money mistake that we're going to be talking about today?
The third money mistake I see lots and lots of women, anybody making, is waiting to invest. The time to invest is today. It was yesterday, but if you haven't started, then start today and or increase it today. Because the thing with investing is it's the only way that we can really see our dollars grow. I mean, we can only earn so many dollars in our lifetime. Our time is limited that we work, and the hours in the day are limited. So we can only earn so much dollars. But by investing it, we can see our dollars compound into many more dollars so that hopefully one day we can stop working
Yeah.
and live off of that compounded interest. That's what we want to see. So the biggest reason I see most people not investing yet are two major excuses. The first one would be that they don't understand it. Well, I just don't get this. I don't understand where to invest, what to invest in, what to do. Thinking about the stock market, that is so daunting, and I don't have time to figure it out, so I'm just going to wait. Well, that is not a good answer. Second one that I hear is that they don't have enough money to invest. So between I don't understand and I just don't have enough, or when I have enough, when I'm making more, when I've paid down more debt, then I'll start investing. So when is enough? What is your threshold? I don't know if you really have one. I am a firm believer that anyone who is not fully retired should be investing in a retirement account. And that is probably the easiest place to start. So if you're not over 60 and you're still working, you should be putting money in an IRA or a Roth IRA, whether that's through your employer. That would then be called, generally would be called a 401k. And then if it's on an outside institution, it's just a Roth IRA or a traditional IRA. So start one of those today. Don't delay. Make it your goal to get one going within the next week. So where do you find one? Easiest place is to start with your employer. First, just check what your benefits are with your employer and if you have the option of adding money to a 401k. If it's a nonprofit organization or a different type of organization, it might be called a different number, but they're all generally the same thing. What you would want to do is start doing that. You can set it up through your paycheck, so it's super easy. And if you don't have much money, if you don't feel like you have anything, any wiggle room in your budget, then start with something simple like 20 bucks. I mean, 20 bucks a month coming out of your paycheck, you probably won't even notice it. It'll just be one less thing that you'll spend. So a few less coffees or one less eating out at McDonald's, you know, it's not that big of a deal. And then work your way up to more and more percents. If you have matching funds from your employer, absolutely try to make it your primary goal to get to that matching. So if they offer 4% match on your salary, aim to have enough extra money to put that 4% in so that you're getting it doubled to 8%, because that will make huge impacts in your money. So why I say not to wait, or what does it really look like when you are investing? Let me tell you a little story. So 21-year-old is very smart and knows that investing is important. So they start investing right away. And they are a little bit aggressive about it. They put $250 in their account every single month. And that could be a lot for a 21-year-old, depending on your job, but they keep their expenses low early in life so that they can make sure that they're doing that. And after 1 year, they've put away $3,000. And just as an example, let's say they stayed at this job for 6 years. So they've only worked at this exact job for 6 years in that account. They've used it for all 6 years and they've saved $18,000. So at 26 years old, they leave that job and they stop saving. If we assume a 10% rate of return, which is possible in today's market, you might have to be aggressive with your risk, but you can definitely get that over time. They never put another dime in. Edrina, how much do you think they would have after 65 years old?
Oh, they'd be what, in the millions?
They would. So most people don't get that. $18,000 that they saved by age 26, and they never touch it again. It just sits there. So they don't have to work on that money or do anything to it. It will actually turn into over $1 million. It's like 1,046,000 or something right around there.
Nice.
Crazy like that. There's not many places you can legally turn 18,000 into $1 million, right?
No.
Some people say if you go to Vegas, but that's a lot more risk than in the stock market.
For sure.
So let's say on the other hand, you're 31 years old and you do this same scenario. You save $18,000 by the time you're 36 years old. Same account, 10% rate of return. Then at 65, you only can get up to $400,000 in returns. Well, that's still darn good. 18,000 to 400,000, that's great growth. So you still got to do it. Yes, do it. But just that 10 years of waiting, same amount of money, you lose $600,000 in interest alone. So the magic with investing is time. There's no time to delay. I say start it as a habit. If you're only putting a tiny bit in, that's fine. You can always increase it, but you can never go back with the time to reinvest. So invest today, even if it's small, get as much as you can in there and then add to it as you move through life and make more money.
Oh, 100%. It's like one of those things where if you do have an employer who has a sponsored 401k or 403b, if you're in a nonprofit, and you start contributing to that account, that's actually going to also lower your tax liability, because the amount that you invest into your 401k is not going to be taxed. So that is another trick on your tax savings, the liability that you owe for your taxes, which is amazing, you know. And that was one of the things that I did when I was working, at a regular W-2 job, is I invested more into my retirement account, and that's how I was able to come closer to that like zero tax liability, is because the more money I put in, the less I was going to owe the IRS. So just kind of like a little trick for you guys, but absolutely talk to your CPA or your tax accountant about any of this stuff if you have questions specifically related to your situation, because people have very different situations. And if you're kind of like in my boat, I think, an IRA is a great option. And for me, I would say automating all of my savings is going to be the kicker here, because I don't have to worry about it. I know that there's going to be money going from my checking account into my retirement accounts, into my savings accounts, and it's all automated and I don't have to worry about it. I just make sure that I'm budgeting for it. So there's another kind of trick for you guys as well. But I think all of these tips, you do have, Allyson, you do have something on your website that goes into more detail about these money mistakes, right?
Yes, I have a download that goes over 12 money mistakes that women make, and it just gets you started thinking about some of the different things that you might be doing with your money that's actually harmful instead of helpful, to get you started and moving the right direction, for sure.
Perfect. So we'll go ahead and link all of that stuff to Allyson's website and the download below in the description box. And I think that's all that we have for you today. I thought that was a really great episode and super helpful for all of the women out there who are thinking about their finances and kind of not really sure. Allyson is a great place to start. Thank you so much for being on this episode of In Real Life with Edrina. And I will see everyone in our next episode.